How would you like to own your own private island? Well, this may not be the reason you get into real estate, but a lot of investors do so to generate wealth and create the lifestyle of their choice. That is exactly what today's guest, Mike Cossette, was able to do for him and his family. Now, this private island hasn't exactly lived up to the billing, but nonetheless, it's a great lifestyle investment for him and his family. We talked to Mike about his investing journey, being a real estate agent and an investor, and understanding what it takes to succeed in today's environment. If you're ready to take your investing to the next level, make sure you check out today's conversation right here on Multifamily Insights. You probably got interested in real estate for the cash flow, the tax advantages, the equity appreciation, and the long-term wealth creation, not for the 2 a.m. emergency maintenance calls. But let's face it, maintenance can be the biggest headache when it comes to building up your real estate portfolio. And that's why I want to tell you about a new property management software called Hemlane. See, Hemlane is more than your typical software. It's really like having a property management support system. First, Hemlane provides 24/7 repair coordination. They have a network of vetted maintenance technicians and professionals in your area to handle repair and maintenance your property may need. Second, Hemlane helps you advertise your listings and even connects you to licensed agents to help find and place tenants. And third, Hemlane is ranked #1 by Gartner with an average of 4.8 star reviews on repair coordination. Learn how Hemlane can help you manage your properties with 100% transparency and control without the administrative work. And as a Multifamily Insights listener, you will receive 25% off for 2 months when you sign up. Just go to hemlane.com, that's HEMLANE.com, and use Multifamily Podcast 25 as the promo code. Again, that's hemlane.com, or just click the link in the show notes. With over 20 years of experience, Mike Cossette has built a reputation as a top real estate expert and award-winning RE/MAX broker. Now, as the co-owner of the RE/MAX Gateway, I guess it's RE/MAX, not RE/MAX. Well, I don't know why I said it that way. Let me read that again, all right? With 20 years of experience, Mike Cossette has built a reputation as a top real estate expert and award-winning RE/MAX broker. As a co-owner of RE/MAX Gateway in Austin, he has shaped the Central Texas market, helping clients achieve real estate goals while building his own impressive portfolio of 18 properties, including multifamily homes, vacation rentals, and even a private island in Florida. Let's welcome to the show, Mike Cossette.
Hey, John, I appreciate you having me. I love your podcast and everything that you're doing for the industry. It's great to be on.
My man, Mike, I appreciate that. Listen, I went over your bio at a very, very high level. Why don't you take 2 minutes and fill in some of those gaps?
Sure. Well, I started out as a college student and quickly learned the investing side of real estate by house hacking with my fraternity on an investment property, doing a little remodel and selling it at the peak of 2025. Realized that you could have other people pay for your property and the bank will continue to lend you money on it as it appreciates. Aha moments there. At the same time, I realized how, not so special I felt as a college student trying to buy a property. So I knew I could do a better job on that side as well. So going into the 2005, 2006 range, got into real estate and investing simultaneously right before the market crashed. And fast forward, out of the crash, picked up a couple properties, at the bottom, turned those into a little bit of a development project, rented out some Airbnbs, turned them into an Airbnb, rolled one of my first properties just recently into a 12-unit apartment complex using some creative financing. And while I was bored in COVID, bought some properties in Florida, including a short-term rental that got hit by a couple hurricanes and a private island that's completely undeveloped. And we are loving that project on how to figure out how to get that monetized while we enjoy it.
Man, I love it, Mike. We're definitely going to talk about that private island, but you talked about, really house hacking while you were in college with your fraternity, taking that experience, learning how banks would still lend to you, and ultimately jumping into real estate investing, both on the brokerage side or as an agent, as well as starting to invest recently, getting that 12-unit building and getting to the private island. take me back to college real quick because I assume, when people hear, college and frats, they're probably thinking of a lot of partying and hanging out and not necessarily house hacking. So when did that kind of click for you that you could house hack with your fraternity?
Well, it really kind of clicked with me when, you know, it really hit home, I should say, once I was able to acquire the property. It was easy to rent out the rooms. And I even rented out the attic. So it was a 4-bedroom house with an attic. And we kind of soft renovated that, rented that out, and learned all the dynamics of renting out rooms, collecting rents, the dynamics between roommates, their girlfriends, parties, all the things that you just talked about. So the ability to pay the debt service and make repairs, and not bad having 5 guys that were somewhat handy living in the house as well. We were able to make improvements and stuff like that. So that was the first aspect. And given we were in college and there were a lot of parties, uh, going to the bank 3.5 years later, needing to sell the property, realizing, hey, we kind of destroyed this thing, built holes in the roof, and the pool was kind of destroyed.
You say bullet holes?
A couple, well, one or two shotgun holes through the roof on the outside edges, and little maybe early hazing days. Kind of got it wrong, but
Okay, so the image I had in my head of this frat house actually was accurate. Got it. Okay.
yeah, it was. It was also a business, so it was a little bit of both. And the party started off early and quickly came to a little bit of a halt once I realized the significance of legal issues that could be coming. So the going to the bank and asking them for some funds to kind of remodel the place to sell it, and having them tell me, hey, here's how much money would you like? Kind of another bell went off. Like, what do you mean? We destroyed the place. Like, you want to give me more money? And they're like, oh, it's appreciated. It's worth way more. We can give you what? That was a big light bulb. That also, clicked, knowing that we bought the house, some other people paid for it. They appreciate it a lot. And now the bank is wanting to give us more money on it. Kind of like our own little bank. As 23 to 25-year-old was, quite the realization. And so, learned a lot of lessons. I think the house hacking strategy for even small multifamily, single family with lots of rooms, that is a very base level, easy way to kind of get into the real estate game, learn the dynamics, not only of property management, relationship building, rent collection, vacancies, and how to manage those, all the homeowner necessities that people usually learn when they buy their first home, on top of the investor pieces with all the rent and income and profitability and appreciation and stuff like that. And then the tax side as well. So I think that was a huge lesson that propelled me right into the real estate game as somebody who never really took orders from other people. Well, I knew how to kind of start my own thing in order to stay motivated.
Yeah, man. I love that you can, I'm going to say stumbled into it, right? But it sounds like you at least had a plan. You bought the property knowing you wanted to house hack and rent out the rooms, but you really didn't realize how much appreciation you could create, even with the fact that you tore the house up, bullet holes in the roof, and the bank still said, nah, it's still worth way more than when you bought it. And that kind of surprised you and realized, oh, okay, there's something to this thing. You could absolutely mess up and not know what the hell you're doing and still create value. Obviously, it's market dependent, but that gave you the view to say, okay, hey, there's more here. What did you go to school for when you were in college? What were you studying for? What was your vision kind of before this real estate thing really started to take off?
Well, I went in business management. That was never switched majors. That was kind of the route I was going to take. I was planning to be on a 6 or 7 year plan, but that got truncated when I found out I had to pay for the last 2 years myself. So it was always going to be business management, and so I think that kind of helped not having to bounce around, and the business side of business management didn't really teach you how to build wealth necessarily. They taught you a lot of high level stuff. But I think one of the main lessons I got from college was not the college education. It was a lot of the relationships and the property management and, how to make your own money, side hustling and that type of thing. Before house hacking was even a term, it was just, hey, let's rent the rooms out kind of thing. So I think there was a lot of great lessons learned, and you know, the business management side really, helped me kind of with the structure of what we wanted to do. But really the relationships and the grit of going through college was what was the real value I think that we pulled from that, or I pulled from that.
Mike, you're one of the co-owners of the Remax office there in Central Texas. I know a lot of people want to get into real estate. They don't really know how to get into real estate, so they go off and get their real estate license and become an agent. You are an agent and an investor. Can you talk about the pros and cons of doing both?
Absolutely. I think that really goes hand in hand with each other. So from an investing side of things, I always try to think about not only what the market is doing, but what's going on in my own life, right? And people progress in life. They start off single, maybe get married, then maybe possibly have kids. Sometimes they have jobs that have them travel. Sometimes they can't travel. And, sometimes they don't have any time, but they have a lot of money, or they have a lot of time and not a lot of money. So I think about the factors moving through, life cycles on my investing side of things. But then from the agent side of things, understanding what's out there in the market, watching the properties that are coming on, the rate of absorption, the kind of rent levels and the dynamics that we have access to as agents that not a lot of people, the general public, doesn't. And so when you're looking at, okay, what is my market advantage? What is the little bit of the edge that I might have personally with the market? And then also now, if you're an agent, you have not only the financing side of being able to get your own commissions and reduce some of the costs, but the access to the properties right up front from an early state. As soon as they hit the market, they hit your buy box, you could be over there in 30 minutes writing an offer in the house and get it under contract, or at least compete for the contract. So I think if you are an agent and you're not investing, I think you're leaving a lot of opportunity on the table. And if you are an investor and have the time to get the license, I think there's a lot of opportunity to, kind of see the market in real time, act quickly, and benefit from the financial side of things, knowing not only when to buy, but when to sell, and what the objective is when you purchase an investment property. A lot of people go in and they buy an investment property because they think it's a good deal, but they don't really have a disposition or an exit plan, which as an agent, you can see how the market cycles go and kind of plan for a window of time. And if that doesn't hit, you've got a plan B and C. So I think they intertwined very well, and it's optimal to kind of do both, or have both at least.
Yeah, I heard you say the three real benefits, right? So one is speed, being able to see a property come across, MLS or your desk, and be able to get over there right away. You don't have to wait and call somebody, try to book a showing. You can go ahead. Typically, things are on lock boxes now, so you can go ahead and get over to that property and check it out and have an offer right away within the hour. So speed is one of the benefits. The second benefit was data, just being able to see all the information that's available between the MLS and what's going on in the market, and being able to analyze that data. And then the third is really just the income, right? Just being able to make money, saving on some costs, your transaction fees there, not having to pay another agent. But also, the fact that you can work with other investors or other homeowners and get compensated for the work on that side. So really those three things are the benefits. What are the cons? Are there drawbacks to being an investor and being an agent as well?
Um, I think maybe getting a little ahead of ourselves. I think that sometimes as agents, we see a lot of opportunities, and we want to take advantage of a lot of opportunities. And sometimes, and I can say this for myself, things are moving fast. We can, as agents, say, hey, we got to make this move. We have access to other investors' capital sometimes, and we have lending relationships and a lot of relationships that can benefit us. But if we're not using them strategically, you can jump into a bad deal because you feel like, I know this market. I know this is a good deal. I don't necessarily need to do all the normal due diligence that somebody who's an outsider coming in would normally do. Ask the questions that might seem obvious, but that you really need to ask anyway. Some of that stuff might get skipped over, and then you find yourself in a spot with a underperforming asset. When looking back, you said, "Man, if I was representing my client and I was helping them buy this, I would have done these three things differently for their protection and mine as well." And I didn't do those because I felt like I had a comfortable handle on it. And especially as the market has kind of changed from the low, 3% interest rates and going way high into the stress fear 6, 7, 8%. That people can get caught with their pants down and want to take advantage of those low rates, since we as agents haven't seen that. And not taking the time to really study and do the due diligence for ourselves that we would necessarily do for another client.
Yeah, I appreciate that, right? You're talking about the due diligence process and, when you're buying your own stuff, you're looking at stuff all the time. You can run a little fast because you're making some assumptions. You just run it through it. Whereas if you're working with a client, you would actually take the time to do the proper due diligence and make sure you're verifying this information and not just running ahead, right? So I know the other thing when I talk to folks who are kind of agents and investors, they talk about the other two things they watch out for is one, just kind of the perception, right, of the cherry picking the best deals for themselves as opposed to making sure that they're working on behalf of a client. Can you talk about that a little bit? Just like as far as how you balance those things, that perception, I guess.
Yeah, absolutely. And I think that's, agent by agent. Um, Everyone has their kind of ethics that they, go with, and also with selling, finding a seller, like selling this on the open market versus knowing that they're going to take a lower price and trying to buy it yourself. There's some gray areas there. I think a lot of it's a case by case basis. For one, if I see a great deal and I've got another client out there that's looking for that exact deal, me personally, I'm going to send it to them, right? I know there's lots of deals out there. And if this is one that checks their boxes and they haven't been able to get to it, then, and a lot of times we can put together a partnership and go that route. But I don't necessarily advise or like stealing deals for that reason of perception and it's just kind of bad karma. Usually, when your gut tells you, "Hey, this is not right," then it's usually kind of the universe telling you to take a step back. So I don't really see that as as a really big problem. I think it's more of a perceived problem than it is in reality, because I think a lot of agents would rather do right by their clients. I mean, that's why we're in this business, to help other people to do better and get where they want to be. And there's plenty for us as agents to see and invest in, and we're not going to lose. We lose one opportunity, that's fine. There's many around the corner. So, that's kind of my take on that aspect. But to your point, another negative side is kind of the liability of, some of the things that as agents and investors that, especially on either side, really, we are now very liable. If we get caught, doing something wrong, we have a license. We can't say we didn't know something. Can't play the ignorant card or, the disclosing stuff, not relaying information properly. So you really have to cross your T's and dot your I's and make sure that doing everything right, because now more than ever, there's so many eyes and scrutiny on agents and their behaviors. And it's just not worth it to kind of cut corners, because not having your license, that can be a deal killer. A lot of you.
Yeah, I appreciate you breaking that down. That was actually the second thing I was going to bring up was the liability. And I remember there was a guy in Chicago I talked to. His wife was an agent. He was not. So a lot of times he would reach out on deals because he could just talk straightforward and frankly about what he came across, whereas she had more restrictions on what she could say and couldn't say. And it was interesting how they kind of balanced that dynamic when they were looking at deals and opportunities, because to your point, she had certain liabilities. There are certain things she couldn't say. You know, if I asked, how was this neighborhood? She could not say it was a safe neighborhood, right? Like you can't say those kind of things. Sounds crazy to us, but there were certain restrictions that she had, whereas he could say this area, this is a terrible area, or hey, this is a great area. My kids go here. So, there's definitely some rules and some lines there to follow. So I appreciate you sharing a little bit more on some of the restrictions or maybe some of the downsides of being an agent and an investor. Let's talk to those agents right now, just who are looking to scale up their portfolio. And really, we're going to say it for the agents, but this is really anybody trying to scale, right? Trying to build up their business. What are some challenges or some mistakes you see agents make as they're looking to scale, as it comes to building up their book of business or growing their clientele? What are some big challenges or mistakes you see folks make?
One of the biggest mistakes that I see, and this has kind of been a lot over the last 3 or 4 years, uh, from COVID going through to middle of 2022, is you know wanting to move too fast, like I mentioned before, not really putting away the extra capex, and then taking the time to stabilize their portfolios. So, moving from deal to deal to deal, yeah, it might feel great as an agent. I know when I'm in the middle of a deal, that's when I get my lift, right? When I find a property and I'm making the offers. And if I could move from just doing deal to deal and buying my own real estate, that would be amazing. But at the same time, from a lender perspective and from just a security perspective, making sure that the operations are in place before trying to scale quickly can be very pivotal in the long term and longevity of your portfolio. So I think that is a big mistake that we've seen a lot of, and it's kind of coming back to bite some people.
Yeah, I appreciate you sharing that, right? It's just making sure you understand what it takes to do these deals, right? You mentioned CapEx, and I imagine for those agents, just understanding how much work goes into a deal, make sure you got proper reserves, proper capitalization. That's going to make it a little bit easier on that front. Now, you said earlier you got this private island, which I think is really intriguing, right? You got some multifamily, some other things as well, with over 18 investment properties. But tell us the story of this private island.
Private Island that is our little red stepchild there that we love to death. It was a play during COVID, and a buddy of mine came into town, was selling some stuff in Austin. He stayed at my Airbnb, and he wanted to get into the real estate game. And I kind of explained to him that there was this new situation called Hit Camp, which was like a Airbnb for your land, that you could kind of rent out a piece of land, and proof of concept, bring the income in and finance a little bit with that income, start developing it, cabins or what have you, and kind of grow that piece of, just from a piece of land, grow a business that will continue to allow you to borrow money as long as it's profitable. So he went away that night and came back the very next morning. I could tell he hadn't slept much, and he said, "I found a piece of land I want to buy," and it was an island. And so we're in Texas, and he lived in Florida. So I'd never bought an island, and didn't really know exactly what that was going to entail. But I'll tell you, we definitely learned a lot. So the initial purchase of the island had to be cash, because we found out sooner rather than later that lenders really don't like to lend on undeveloped islands, right? What could go wrong? So I knew that had to be a cash deal, and he came to me, and I knew he didn't have enough cash to make that happen. So he brought me, and I agreed to be a partner with him, and we brought in another partner, another friend of mine in Florida, as a kind of a buffer to kind of make sure that nothing nefarious happened on this island while I'm in Texas and he's in Florida. So the idea behind that was, as I said, to rent it out and start to slowly develop it. However, the logistics that we didn't know about and had to encounter with all the crazy environmental agencies, Florida EPA, all of the red tape, the topography levels, the ability to put slabs and get permitting for going vertical on structures was really impossible. So that has kind of evolved over the course of last couple of years, and now it's really, since we have no low to no overhead, it's just a small amount of taxes split between three people. We can carry that for as long as we like, and so the hurricanes, if anyone's paying attention to what's happened in Florida, there's been 4 massive hurricanes that have hit in the period of about 13 months. So we've had to adapt to that and kind of understand that whatever we do out there, it can't be, we can't build a slab out there. We're stuck to really doing solar and rainwater collection, and still trying to understand how the septic and sewer is going to work. But it's going to have to be something that's either underground, like campsites that you can pop up, or containers that are kind of corkscrewed to the ground, something that a massive hurricane can kind of withstand. So those are some of the issues that we're working through now. Tide levels was something we didn't really imagine. 3-4 feet difference in water levels. Get a pontoon boat, having to walk a pontoon boat through shark and gator infested waters on the coast of Florida is not fun. And so I think, but I can say that from an enjoyment perspective and the fun and ability to go out there with our family and camp and hide a little treasure chest, allow the kids run around and do a treasure hunt, and then the man escape to kind of get away and go fishing and just vent and come back to our families as a refreshed human being has been invaluable. So I think we are completely happy with that. Monetizing that when we all have small kids in our own business may not be the play for us right now. But the appreciation side is really, looks like it's going to be really nice. We bought it beginning of 2020. It was a big feeling of with COVID to get away and get these private escapes and all of that stuff. So these little pieces of private land really went up in value, and so that's going to be kind of I don't know that we'll ever sell it, but if we do and do nothing to it, we'll do very well on the appreciation side of it.
How like I'm trying to picture this, right? So we say private island. I'm sure our listeners have every range of idea in their head, right? From Gilligan's Island or something else. So how large are we talking of this island?
Right. So the whole thing is about 1.2 acres.
Okay.
And so the main island, which is basically everything that kind of we're talking about, is about 0.8 acres. And then there is a mangrove strip that goes out and it connects to, and that's about 0.2 acres. And then there's a little mini island that's connected, that's another 0.2 acres. And so the main island and the mini island are about 300 yards from each other. We talked about putting a little putting or a tee there and having a green on the other side and doing a little golf thing because it's right about that distance that you'd see on a par 3.
I love it, man. So with something like that, when we say undeveloped, is it completely undeveloped, or is some of, there's some infrastructure there?
Completely undeveloped.
How do you get there?
You get there one of two ways. So the first time we started trying to go out there, we'd rent a pontoon boat and go out there making sure that we're trying to hit the tide levels right. And it would take about 45 minutes. We have to go all the way down the Withlacoochee River and around. And this is the Gulf side of Central Florida. So we're not talking sandy, nice beaches. We're talking, brackish water with some gators and bull sharks and lots of clams, redfish, that type of more or less fishing environment. And the other way to get there is about, with the wind at your back, about a 20-minute kayak ride straight through, where you don't have to worry too much about the tide levels. There's stretches that can get ankle deep, so at low tide. So doing the kayak route, you can usually get there unless there's a storm, but it's about 20 to 40 minutes depending on the wind. With the boat, unless it's a flat boat or an airboat, then it's usually going to take about 45 minutes. And again, that's, environmentally challenging sometimes. So, getting infrastructure out there, very, very difficult. And I think, for us, getting out there with the kayaks is the most fun thing, but now with the family. With the family, we got to go route.
Yeah. What I'm hearing you say is that, this investment was more of a lifestyle investment, right? It's kind of a cool thing just to have a private island, take the kids out there, let them run around. Really there's no development. So you got to, use the bathroom old fashioned style, but they're out there. It's a fun time. It's a fun trip to get out there. But this is not an investment where you are crunching numbers and seeing the ROI. You looked at it and say, listen, all we got to do is cover the taxes. If we feel comfortable with the taxes, let's go ahead and own it. We'll continue to look into and explore development opportunities. But this investment wasn't made primarily based on the ROI. And that's okay. And sometimes we can do those things, especially if you've already built up kind of the primary portfolio where it can fund these kind of more, I'm going to say speculative investments, but it's really more of a lifestyle investment. So I appreciate you just sharing that and giving a little more context. You're in Central Texas. We've seen the market kind of go, crazy high to maybe it's taking a little bit of a dip, and things seem like they're kind of panning out a little bit more now. What are you seeing in the market?
Well, so I think from an investment standpoint, we've been kind of on the down trail of, year over year negative appreciation. Over the last 3 or 4 months, we've seen a lot of stability. I think there are wildly different pockets. So one of the things that, when investors come and say, well, hey, we want to invest in Austin, that not only the asset class, but also the individual pocket that you're looking at. I think that's probably everywhere, location, can vary, and price bands. So we have different price bands that are performing wildly different within the same areas. So I don't think I've ever seen the variety of dynamics from one zip code seeing negative appreciation to another zip code, the same price point, doing much better as I have seen in this current marketplace. I think the biggest advantage and opportunity is going to be that ability to negotiate. There are a lot of distressed sellers out there. There's a lot of people not comfortable with the economy that are willing to really negotiate, especially if they've held properties for a while and they do have a lot of equity. They are, a lot of them are wanting to get out and are willing to take a lesser, price point than they're marketing at. And I think finding those, we're able to find a lot more of those distressed sellers and opportunity deals now than we have been since 2005, 2007, 8, and 9, which is the last time we've kind of seen opportunity like this. And we are getting people able to make bigger plays on bigger assets that they may not have been able to do before. So that's one of the biggest things I think that this market has to offer, is that ability. And if you're bullish on Austin, which a lot of people are, with all the big businesses here, the long-term appreciation and the long-term play is there. I believe that. Elon believes that. Mark Zuckerberg believes that. Apple believes that. So I think following those guys and their cue is probably a smart move. And getting in now, even with the higher interest rates, getting that lower price point, it's something you can't go back in time and do. You can always go forward and refinance, but if you can afford it and you can get that deal now, these are where the prices are kind of bottoming out. Now we might stay here for a while, but I don't think the data is not telling us that we are continuing on a downslide.
Yeah, I think it's interesting you talk about the sub-markets, and some may be on the rise, some maybe on the decline, even at a similar price point. And it really comes down to, one of the things that this show was originally built on, which is understanding the target markets, right? So the sub-market data, the sub-market information is so key, and being able to pinpoint the best markets is critical. We actually put together a hack, 35 hacks to find the best sub-markets to invest. And this is something that is really important. So we'll put a link to that in the show notes. But the other thing I heard you say was focus on a long-term investing, right? A market like Austin has a lot of the fundamentals. Super uber rich folks are investing in Austin and believe in the long-term vision for Austin. So if you're investing in for the long term, that's going to alleviate a lot of those concerns. And then the third thing is that there are going to be some investors who are distressed, or some homeowners or property owners who are distressed. This is a great time to look and identify those opportunities to come up with a solution where maybe they wouldn't have been able to sell it or willing to sell it at a discount a year ago or 2 years ago. But in today's environment, if you can focus on the long term, identify distressed opportunities in desired locations, that is a great recipe for success. For our listeners who want to learn more and follow you, you can connect with Mike on many different social media platforms. His handle is Ask Mike Coss. We'll put a link to that down in our show notes. Right now, we're going to transition to our round of insights. When you think you found a great deal, asking the right questions could be the difference in finding a stud or a dud. Listen, we've put together a new guide to help you out. It's called 7 Questions You Must Ask Before Investing in Apartments. Now, in this guide, you're going to learn how to uncover red flags, quickly identify underwriting risk, vet sponsors and team members, and confirm key assumptions. Now, this is a guide that's going to help you be a better investor, whether you're an active investor or you're a passive investor looking to partner with other operators. Asking better questions is the key to identifying great opportunities. So download this free guide. Go to our website, casmoncapital.com/7 questions. That's the number 7 questions. And you can access this free guide today. To make it easy on you, though, we've put a link in our show notes. So you go to the show notes, you can click that link and access the guide right now. This guide's going to help you make better investment choices, asking the right questions to build your portfolio. So be sure to download it today. Mike, give me a failure or an apparent failure that set you up for later success.
Well, I bought a deal in Florida that I thought was going to be a very successful Airbnb, and ended up getting hit by multiple hurricanes. And so that looked like it was going to be a massive failure. And now, 2 years after the first hurricanes have hit, we bootstrapped it together, helped with the SBA, helped come in, and we're able to get a big payout from our insurance company. And so now that deal looks like it's going to perform much better once we dispose of it. And we're going to be able to get that money back. So it turned out to be a tragic, heart-sinking feeling when you see an asset just completely get decimated, is actually going to potentially turn out to be a nice, profitable play that we can roll into something that's going to fit our family, our plan, and our new lifestyle. Given that I had a lot of kids since the time I bought that, and now that's actually going to work out in the benefit.
Give me a digital or mobile resource you recommend for our listeners.
Ooh, I think for agents, one of the resources that I really love to use is it's RPR, and it's NAR's Realtor Property Resource. That's something that you can jump on your mobile. It will give you all sorts of insights into the market, into the demographics, the histories of properties, all of that data really quickly, and not have to go through multiple apps. I think that is one of the best go-to that I have. And the other, I think from an investor standpoint, if they're not in that Bigger Pockets network, I gotta say that has so many amazing tools from the calculators, the deal finders, and they're always adding stuff like rentalizers and stuff like that. So I think that is a massive tool for investors. I can't imagine if you are a real estate investor and you're not already using that or part of that community, then it's going to be a short time before you are. It's
Great points. Love it. Love it. Give me the book you recommended or gifted the most in the last year.
Oh, The Slight Edge. That book has changed my way of thinking, my daily activities, and really breaks down, the consistency of doing things over time. And I was recommended that book several times, and then now I've read it a couple times, and my wife told my wife, hey, you gotta read this. I'm giving it to friends and family members that I feel like you can help. So I think that book has been one of the pivotal books. I don't know why I can't say that word. That I recommend and have been recommended in the last 18 to 24 months.
What's the daily habit that helps you stay focused on your goals?
Daily habit. Every morning, I have 4 kids and they're all young. And so we got to get them all to school. And so from 5 a.m. to 6 a.m., I have a home workout system and positive podcasts and learning audiobooks while I'm getting physical, getting that pent up energy out really helps start my day amazingly. And then after I get the kids to school, sitting down and a little bit of meditation and some spiritual connection as an entrepreneur and responsible for a household and other households, lots of families and units and stuff. There's a lot thrown at you. And that's a place to kind of let everything go, take a breath, relax, and attack your day without having the weight of the world on your shoulders every morning.
Give me your number one insight for scaling as an investor agent.
Staying adaptable and not trying to force a deal into a market that's not advantageous. So things you can't control. I think building your strategy around the moving parts that are always changing at that time is key. So many times we have investors come to us and they want to do a specific strategy for whatever reason. They read it and this and that. I think that's the wrong way to necessarily look at it. I think that especially if you're a new investor, understanding where the opportunities are, where you're at in your life, and being adaptable. When you purchase something, having that A, B, and C plan is key, because more times than not, that plan A can fail pretty quickly, and having a viable plan B and C is something that I highly recommend. So I think staying diversified and being adaptable is, that would be my advice.
You are in Austin. Give us your favorite place to grab a bite to eat.
So Matt's El Rancho. This is one of the oldest Tex-Mex places on South Lamar in Central Austin. Famous queso, and I love going there. I used to live right by there, but anytime I get to go to Matt's El Rancho for amazing Tex-Mex, that is something that Austin is barbecue and Tex-Mex. We have so many barbecue places and Tex-Mex places, I could go on and on, but Matt's El Rancho is my favorite.
All right, Matt's El Rancho it is. You give some great stuff, Mike. I appreciate you sharing your journey, starting off and, your frat, house hacking, shooting up the holes in the roof and realizing, wow, you can still make money even though we did all this wrong. Let's see what happens if we do it right. And from there, you started, as an agent, building up your own portfolio. Today, you got 18 properties, including that private island. And I think the big thing was just understanding the pros and cons of being an agent, as an investor, being able to get, speed and quick access to deals and being able to move more efficiently and quickly, recognizing some of the resources and the access that you have there and just some of the benefits and perks from that standpoint, but also recognizing responsibility, just make sure you're doing right by your clients, make sure you're doing things the ethical way and being able to grow and scale. And also just talk to us about the difference of investing for cash flow and upside, but also sometimes you make investments that are more based on lifestyle. And it's okay to do that. Again, for folks that want to connect and learn more, you can go to Ask Mike Koss across different social media. I know you're on LinkedIn and Instagram as well. So we'll make sure we put a link to that in our show notes. Mike, thanks again for being a great guest and coming on Multifamily Insights. We look forward to staying in touch with you, and I hope you have a great day.
Thanks a lot, John. I appreciate it. And it was great to be here with you.